Hey everyone, Andre here. Today we're diving into Forex, that's short for foreign exchange. It sounds super complex, right? But it's not, I promise. At its heart, it's about trading money. One country's money for another's. We're going to break it all down. So, grab your coffee, let's go. So, what is a currency pair? Imagine you're at an airport. You want to swap your dollars for euros. That's basically a currency trade. In Forex, we do this digitally. A currency pair has two currencies, always two, no more, no less. Like EUR-USD, a famous one. One is the base, one is the quote. Let's talk base and quote. Take EUR-USD again. Easy example, EUR is the base currency here. USD is the quote currency. If the price is 1.1000, it means 1 euro costs 1.10 US dollars. You're always buying the base and selling the quote or vice versa. Simple once you see it that way. Why do these prices change? Ah, the million-dollar question. Well, not always a million. Prices move because of many things. Supply and demand mostly. Big economic news plays a part. Interest rates set by banks. Even political stability matters. Traders try to guess these moves, and that's the game of Forex. Now let's talk about the stars, the most traded pairs out there. These are called the major pairs. Why major? Because they're popular. And they all involve one currency, the king, the US dollar, USD. Yep, the greenback is in all of them. This makes them super important and very, very liquid. So, who are these major players? You've probably heard of some: EUR, USD, Euro and US dollar, USD, JPY, US dollar and Japanese yen, GBP, USD, British pound and US dollar, also known as cable. Fun fact, USD, CHF, US dollar and Swiss franc, AUD, USD, Aussie dollar and US dollar, USD, CAD, US dollar and Canadian dollar. These are the main ones to know. What makes these majors special? Well, high liquidity is key. Lots of buyers and sellers. This usually means lower costs. We call these costs spreads. Think of it as a small transaction fee. Majors often have tighter spreads. They also have tons of news and analysis available everywhere, making them a bit easier to follow. Let's take EUR-USD as an example. It's the most traded pair globally. Its price can be moved by news, from both Europe and the USA. Think interest rate decisions, from the European Central Bank, ECB, or the US Federal Reserve, the Fed. Job reports, inflation data too. It's a constant tug of war between two giant economies. Okay, we know the majors now, but the Forex world is bigger. Next up, minor currency pairs. These are also called cross-currency pairs. What's the deal with these? They involve major currencies like the euro, pound, or yen, but crucially, the US dollar. So no USD in the mix here. Let's see some examples, folks. EUR GBP Euro versus British pound. This one is big for UK-Europe trade. EUR JPY Euro versus Japanese yen. GBP JPY British pound versus Japanese yen. This one can be quite volatile. AUD JPY Aussie dollar versus Japanese yen. These pairs have good volume too, but maybe a bit less than majors. Spreads might be a little wider. Now for the wild side, exotic pairs. Sounds exciting, right? It can be. An exotic pair has one major currency, paired with a currency from an economy that is smaller or emerging. Think countries like Mexico or Turkey, or South Africa or Sweden. So one well-known currency, and one less commonly traded. Examples of exotic pairs: USD tri-US dollar versus Turkish lira. This can see some big swings. EUR-PLN Euro versus Polish zloty. USD SGD US dollar versus Singapore dollar. USD ZAR US dollar versus South African rand. What's different about these? Lower liquidity, much wider spreads. They can be super volatile, meaning prices can jump a lot and fast. Higher risk involved here. Alright, so many pairs. Which ones should you trade if you're just starting out? My friendly advice: keep it simple, stick to the major pairs first. Why? They are more stable. Well, relatively speaking, of course, spreads are lower, saving you money, and there's tons of info online. Learn with these before anything else. For beginners, I'd suggest maybe one or two. Don't try to trade everything. EUR-USD is a classic starting point. It's the most traded, as we said. Lots of educational material on it. USD-JPY is another decent choice. Focus on understanding their movements. Learn how news affects them. Practice with a demo account first. Seriously, paper trade before real money. What if you have some experience? Maybe you've traded majors for a while, you understand risk management. Then, you could look into minor pairs. They can offer different opportunities, perhaps related to specific country news that doesn't directly involve the US. But remember, liquidity might be less, and volatility can be different. Always manage your risk. And what about those exotic pairs? These are generally for the pros. the very experienced traders who have a deep understanding of those specific economies involved and a higher tolerance for risk. The potential for profit is there, but so is the potential for big losses. So be super careful, everyone. Trade smart, stay informed, and good luck.